We'll make your offer a cash offer. We'll buy the home for you. You finance later, things like that. That's another Zavi button on the guaranteed offer program. It's another thing you can say, you can do for your clients. Another way to be full service. This is one that I'm seeing in a very, very big way. I want to talk about the need, like never before, for a real estate agent to be a full service real estate agent. I don't think they are one unless they have hard money financing options readily available for their clients. Like, I just don't think you can call yourself, I always had that for my clients. And if you want to know, hey, how do I get more investors and stuff? Well, you got to have financing for them. They're not going to get their own. They don't have that. So all of you in your own businesses, if you still sell real estate, you better have at least five hard money lenders for your clients. And all of your clients you coach need to find 5 hard money lenders. And you need it for everything. I mean, I could probably take 5 hours telling you what you need it for, and you'd be shocked. You're like, oh my gosh, I could have saved at least 100 of my deals in the past had I had one of those. Like people that want to find a house before they buy. Like, I don't know about you, but I'm at a point in my life where there is no way in hell you are going to get me to sell my house and have the closing line up with the purchase of a new home. That ain't going to happen. I'm not up for that. I got too much going on. That seems like the most massive, panicked inconvenience on the planet. What I'm going to do is buy another house with hard money, close fast in 2 weeks, because I actually want to get my offer accepted. So I'm not going to use a freaking loan. Those days are over. Like, you're writing offers with financing? Do you want to get your offers accepted? See what I'm saying? So I'm going to go buy it cash so I can get the house because I'm aggressive and I want the house. I don't want to be one of these losers who's writing offers who can't get one accepted and keeps bitching about missing out. Stop being a loser. It's in your power. If you're an agent, have the conversation, have a tough conversation, explain you can be a loser or you can get your house. I advise getting your house and then taking your time, because then you buy the house, then you can take your time moving in, don't have to disrupt your whole life, and then you can fix up your house to sell without you living in it, and you could like a decent human being, not like a freaking ghetto caveman. Like, do it the right way. I mean, if you can afford it, do it. And then we can fix it up and we can put it up for sale and we can sell it. All the while you're refinancing your long-term financing on your hard money purchase. Like, to most agents, this is like light bulbs going off. And I'm like, what the hell? Like, this is the way you're supposed to do it. But we are so conditioned to be tightwads. No, let's make it. And you wonder why iBuyers are winning. It's because real estate agents make life hell for their buyers and sellers, and they don't even know it. They try to concur closings, line them up, and it's stressful. And oh my God, my movers are lined up and all this, and we got to hurry and close. And there's these deadlines and I need appraisals done. And they didn't have to be that way. And I don't think most agents know that. You tell them this. I know some light bulbs are going off in your heads right now. I know it. Make those same ones go off in your clients' heads. And then make them tell the agents on their team to go off. That's just one way to use hard money financing. That's just one. I can give you 20 or 30 that'll make more lights go off. Number 2, if you have investors. I live in California, which means I buy up all of the property in your areas. That's what we do in California. They think that that's what we're built for. We grow up, we raise babies, and they buy everything on your block. That's what Californians do. We move, we infiltrate your neighborhoods like where Heather lives, like locusts, and turn everyone into liberals. That's what Californians do. Yeah, see? Or we just buy all your stuff because we're all so rich because we have all these expensive houses. That's the misconception. Sean is a locust, by the way. Sean evacuated and spreading his seed in Boise. That's what he's doing. So the point of the matter is, I do buy property in other states, and I'm really annoyed when the person I buy with doesn't have hard money financing for me. I'm just annoyed because it's like, does somebody coach you? Like, come on, man. Because you know how hard it is for me to get hard money financing, lending across the country? Hard money financiers don't want to do that. because there's different rules. Like there's deed of trust states, mortgage states, hazard warranty, there's closers, there's escrow companies, there's title companies, there's attorneys that do closing, there's judicial foreclosure processes, there's non-judicial foreclosures processes. Hard money lenders want to lend. They're old people with some money. They just want to lend where they can see it. And if something goes wrong, it's easy. They don't have to like deal with getting like, the White House, legal counsel to like get the property back and all that kind of stuff. So hard money financing is local. It's one more thing an agent can do to justify their existence. Because you need an agent to get you people, make the process easier. So if I can go into like Pittsburgh and that agent has hard money financing for me, I can make his life easy too, because now he's buying property for me 2 weeks, all cash close. And then he lets me refinance on my own, which means I got to deal with the appraisal. I got to deal with all that kind of stuff. He doesn't even have to mess with it. So your transactions are a lot easier and a lot faster if you have hard money financing. Now you're going out and getting this group of investors with the guaranteed offer program in mind anyway. So half of them are going to be hard money people, half of them aren't. They're going to give you, hard money rates right now, it's kind of hard to tell, but I would say right now the rates, and you just got to kind of immerse yourself in this. I know it's if you're not into investment, 10%, 2 points up front is pretty normal. Usually your loan term is going to be 6 months to a year. Okay. So 2 origination points paid up front. They're paid at closing. The term's usually 6 months. You usually only need them for 3 months because you're going to buy it, close in 2 weeks, and then you're going to refi, and that takes another couple months, 3 months to be safe. But they usually want it back for sure in 6 months to a year. Most want, in this market, in this day and age, they want you to keep it as long as possible. And that's what they'll charge. It's not abnormal to see 3 points up front. In the right instance, if I'm buying in Kansas City, I don't mind paying 3 points because houses are dirt cheap there. If I go buy a $180,000 house, what's 2 points, 3 points? Doesn't matter. Make sense? So investors aren't going to care on that. But 3 points is pricey. 1 point is not pricey. 1 point's a really good deal. 10% is about the going rate. 12% is pricey, but it's only for 3 months. So it's not that big of a deal. 8% is a good deal. 8% are what, that maybe 6, 7, 8 is what the pros are doing. That's what guys who use hard money financing at all times do. The Armandos of the world, the Yalis, everybody, the guys you saw up at the summit, what they were talking about. They're playing around in that low number. Why? Because they tee up their investors with 10 and 12 point guys. So they get the good deal for bringing the suckers in. So what does that mean? If I'm the agent in Pittsburgh that's got hard money financing for me, and I'm bringing all these great deals, do you have any idea what kind of return that is? Like I'm gonna borrow $200,000 or $150,000 from this hard money lender for 3 months. And I'm going to pay him 2% on that, which is $6,000. That's just off the points, the 2 points, and 10% a month. He's going to love you. He's going to sign memorandums all day long. He's going to love you. And in addition to that, he's going to give you your own great deal. So say, Brian, for you, 6 points, no interest. Just, I got plenty of money right now. You keep bringing me deals. Now, heaven forbid if you guys don't start investing too. Because that's where my focus would be. I know with all my clients, I make all of my clients buy rentals regularly. Not flip, hold. Why are we flipping? Flip implies you want to sell right now. We don't need, long-term flip maybe. Right now, buy and hold. That's pretty obvious. These flippers are just crack addicts, man. They just can't help getting that paycheck and taking that money and putting it in the bank and watching it turn into the peso with inflation. I don't get it. They can't help it. They think they've got a lot of money in there when they really don't, because it's buying less and less for them every single year as housing prices keep going up. Hold and buy more. I don't honestly think most flippers are sophisticated enough to get that concept. I'm not joking. They're more hammer and nails guys. Buy low, sell high. But boy, you could coach them. You could coach them. These are the conversations we need to be having. Most of my clients are buying anywhere from 5 to 10 rentals a year. And they love me. They will never leave me because they've been doing that for the last, I don't know how many years. Now a lot of them have 100 rentals. And then they're millionaires because of those 100 rentals. Because prices have gone up, what, 30, 40% per property? They got 100 of them. They're worth like $3, $4, $5 million all of a sudden, just because. And I'll tell you right now, you run around trying to buy with, traditional financing, you're not going to have time to buy more than 2 or 3 of those a year. That's exhausting. Getting all your documents together, looking at appraisals, going over inspections, negotiating back and forth. Man, stop being an amateur. We're coaches. Buy it. Get hard money financing, refinance the minute it closes. A lot of teams, my wife's is one included, that are encouraging the agents on their team to stop using financing when they submit their offers. You'll see this in real hot areas. Sean will definitely know this. Areas that are used to having 10 to 15 offers on every property, like California, it's, your buyer's agents start complaining, hey, I can't get any offers accepted. I can't get any offers accepted. Then stop putting loans on them. Get them hard money financing, have the tough conversation up front and say, here's how we're going to get you a property. Are you tired of this? I'll get you the financing. You're going to start putting offers on properties, close in 2 weeks, all cash. You're going to close it, then you're going to refinance it with your long-term financing. So make sure right now, going forward, we're going to have this market for a long time. Almost every predictor, almost every indicator tells us high buyer demand, low supply for years to come until supply and demand get in whack, which means it's going to be competitive for a long time. You watch, the norm is going to start to be using short-term financing to be a stronger buyer. Why sellers care so much about this, I don't know, but they do. They just feel, and I think agents do too, because it's just easier as an agent. Your escrows, or your transactions, I should say, are so much easier if they're 2 weeks closed cash. They're so much easier. So everybody likes it. The buyer's agent likes it. The listing agent likes it. The seller feels safer, I guess. So if everything else is equal, you're going to win more deals. It's just a matter of having hard conversations with the client and say, guys, we have had some luck. We've actually secured short-term financing for you. And we've had some luck with it because, we're up against 10 to 15 offers in your price range. And if you want to get the property and not keep missing, we have this option for you that makes you, we turn your offer into cash offer. And that's the call of action right there. That's another Zavi button on your website. We'll make your offer a cash offer. We'll buy the home for you. You finance later, things like that. That's another Zavi button on the guaranteed offer program. It's another thing you can say, you can do for your clients. Another way to be full service, another way to set yourself apart, and we'll help you do it. And you can find out, and you got to have a lot of CYA stuff here. So you got to make sure you tell them, hey, it's going to be tight on the appraisal if you want to do that. All those types of things. We're going to have deposits at risk, all the normal stuff. And you got to make sure you're real strong on your financing so that you can refinance later, or you're going to have a nightmare. So that's, a lot of advising them in emails. So we have it in writing to make sure they are getting pre-qualified for a refinance. Usually you can start the refinance while you're under contract in 2 weeks anyway. Fill out the loan app, start doing the checks, the credit checks, all that kind of stuff. So you start that refinance process while we're still under contract on the hard money close. This makes sense? Now you're out there putting flips in front of your guaranteed offer investors. You're getting hard money loans for you to buy. You're getting hard money loans for your investor clients. You're getting hard money loans. And now you're in the middle of this new spider web. People say, how do I get into more investment? How do I get those bigger deals, those apartment complexes, those sixplexes? This is how you get in through the financing end. You have to get those connections. It's a referral-based business. It's almost like you're setting up a vendor database with private financiers. And all of a sudden you have all the money to jump on anything and long-term finance later. Your clients do too. And they know you've got all those options. You're also the one that's getting off-market deals in front of people, showing them that a whole lot, especially with your guaranteed offer program. They also know the flippers. You start to get a relationship with all the flippers. You can actually say, hey, I'll help you with hard money financing. Start giving me some of those off-market deals you don't want. All that kind of stuff. If you really want to take it next level, make sure you get lined up with all the wholesalers in every area. In KC, I have every wholesale listing emailed directly to me. And Cammie, you'd be shocked how many there are. There's probably 5 a day, off-market deals going on investment properties. I get them every morning. As an agent, you have to be on those lists if you have investor buyers. And if you start getting hard money lenders and flippers and all these people, all you do is just forward those on. It's all you do. It's so easy. It's all done for you. The wholesalers do all the work, putting the photos together and the price and all that kind of stuff. Now you're putting deals in front of people they couldn't find on their own. They're giving you lender, you're getting loans. I mean, it's all so dang easy. You just get so dialed into the local real estate community. It's unbelievable. Those are all things I do every area I buy. I get all hooked up with the wholesalers. And I mean, I think you guys know how to do that if you've taken my flipping course. If you do, take my flipping course on financing. You'll learn about hard money loans, joint ventures, how to find wholesalers. I mean, I can just tell you real quickly, you go to Facebook groups in those areas, just type in Kansas City wholesale, or wherever you're buying, Detroit wholesale, Pittsburgh wholesale, join all the groups. Then you go on Craigslist for those areas. They are active on Craigslist. Go to the world of sketchy and go to Craigslist. That's where the sketchy wholesalers are. And they are amazing because you just get amazing. And you get a lot of deals that cost about $5,000 to fix them up. That's why you got to you kind of got to get to know the flippers, get to know the wholesalers, and it all fits together. So you really can't skip any of those pieces. If you know the flippers, you can find their hard money lenders, right? If you go in the wholesale groups, you can ask for hard money sources. And you need like 5 hard money sources because they run out of money all the time, right? I mean, if someone has $5 million, it doesn't take long for a bunch of flippers to run them out of money. And they got to wait 60 days till they have another one. So you're gonna have your A guy, your B, your C, your D, your E, and it's usually based on the terms and their availability. My A guy is like an 8%er, and then I got a couple 10%ers, and then I got a 12%er, and there's usually some commercial hard money lender locally that's my last case resort. But if the deal's good enough, I'll do it. It's just a 3-month loan. Makes sense. And if you go to flippers, they're gonna give you their D and C lenders. They usually hide their A lenders like a golden goose.